Welcome to the C-Suite podcast with me, Russell Goldsmith and Graham Barrett. We're back at the Venetian in Las Vegas once again for Money 2020.
Yeah, we're bringing you two special episodes in partnership with Newline by Fifth Third, who deliver modern technologies for a seamless embedding of financial services into client platforms and products with the highest standards of performance, scalability, and risk management.
We have a great lineup of guests from across the financial ecosystem to talk about some of the key forces driving significant changes in the payments industry.
Really hope you enjoyed the show. Pleased to say that I've now been joined by Kash Razzaghi, who is Chief Commercial Officer at Circle. Kash, it's great to have you on the podcast.
I appreciate it. Looking forward to it.
Yeah, no, this is awesome. So now you spoke on a session yesterday, didn't you? Let's start with that session. It was entitled Buzzword to Backbone, Blockchain's Future Role in the Payments Ecosystem. It's very Money 2020 title, that.
A wordy title.
Absolutely. But the one word that kind of sprung out for me there was backbone, I guess.
Yeah.
So what does that actually mean if we talk about blockchain becoming that backbone of the financial ecosystem? What would that look like in practice?
Yeah, the main premise behind that session is that there are a lot of buzzwords out there today about crypto and blockchain technology. What does it really mean? And so if you think back to what the internet did for content in allowing content to be distributed worldwide instantly and at very low cost, we believe that blockchain technology has the same ability to be the infrastructure layer for money. And so Circle was founded on that vision where what if you were able to upload dollars on the internet and use blockchain technology to make sure that it can be distributed worldwide with instant finality and very cost effectively. And so we think that blockchains and new iterations of blockchains have the ability to be the operating system of the internet for value exchange. And so what does that look like when adoption and blockchain technology reach the mass and in terms of the kind of value exchange and advantages it'll bring to society? So that's really what the session was about, and we think we're nearing that point where blockchains can have that impact.
That's interesting you say that as well about the internet, because I read something a while ago that said, yeah, the internet was never designed for the transfer of money. That wasn't the point of it. So, that's clearly where the blockchain comes in. So I guess the follow-up question to that is, what are the implications of that then? We're very used to the traditional financial ecosystem. So what are the implications for banks and financial institutions?
Sure. I think the same expectations people have today when they send and receive content. When you send an email, you expect it to be received instantly. When you send a WhatsApp message or a Telegram message, you expect it to be received instantly. That same expectation will happen with money. There will be expectations around the world, whether you're a business or a consumer. When you're sending money, it lands instantly, and the cost of sending money will eventually go to zero. And so the premise behind Circle and the theory behind what we've been building for so long is really is that with blockchain technology, now you can send money regardless of the amount, whether it's a few cents or tens of millions or hundreds of millions of dollars. The act of sending it should be low cost, and it should land instantly. And so I think that's the implication. And so what would a world look like when transaction volume increases, maybe by 1,000,000x? More and more people, more and more businesses are transacting on the open internet with blockchain. What implications does that have? There's obviously value that can be created, but is there the infrastructure available to be able to support that kind of transaction volume? Everything from infrastructure to make sure it happens, all the way to guardrails like know your customer and anti-money laundering programs to make sure that money is exchanging hands for those that need it. And so that's the implication: cost going down and instant finality in settlement. And we think that there's an incredible opportunity for businesses worldwide.
Okay, and picking up that point about infrastructure then, what are the challenges that still exist to ensure that this is completely mainstream, I guess?
Yeah, I mean, there's two. The first one, we'll call it, we'll talk about the technology. Several years ago, the infrastructure probably wasn't at a point where it could handle the level of throughput that would be required for this to go mainstream. The transactions per second, the infrastructure wasn't there. It's getting there. It's still being developed and it's still evolving, but it is getting there.
Time frame on when that might be in place?
I think you're starting to see more and more blockchains being developed. Circle announced our own L1 blockchain, and so I think you'll start to see in the next 12 to 24 months more of these mainstream utilities for blockchain. That's number one, making sure the technology is there. But number two, it's regulation. And ensuring that regulation makes it clear what businesses can and can't do and gives businesses the ability to feel confident that they can actually enter this space. And you're seeing this play out in regulation with the Genius Act and with MiCA in Europe and other regions around the world. Once those two marry, regulation and technology, that's when I think you'll really start to see mainstream adoption.
Okay. And I guess to come back to Circle then, what you're trying to do here is bridge that gap between crypto and fiat, aren't you? And help financial institutions with their journey in that space. How are you doing that?
Yeah, well, again, going back to the mission statement of the company, and it's really meant to create as much economic prosperity through the frictionless exchange of value. So what does that mean? It means removing intermediaries when they're not necessary. It means trying your best to lower the cost of transactions around the world. But the only way you can actually get into digital assets is by leveraging traditional banking and traditional legacy payment rails. And so we work with banks around the world. Banks are, in fact, incredible partners for us in ensuring that the conversion of fiat to digital assets can happen. And in many cases where people really want to hold fiat, the digital assets can be a payment rail. And so the digital assets can be used, stablecoins can be used to send money, but once it's received, it can be converted back to fiat. And so we do view what we're doing as a bridge. It's not a replacement. It's a bridge to ensure that the infrastructure that fiat and banks and legacy payment rails have can be converted and transitioned to digital assets. And you're seeing this play out with every major bank, every major fintech provider, every major payment service provider. They're building on-chain rails. Mm-hmm. And so I think that's where the direction's heading.
Okay. And talk to me about B2B or institutional payments. Where do you think the best cases for crypto are in those areas?
Working at Circle for about 6 years, one of the main questions that we get is what's the use case for stablecoins? And eventually the real question was, well, what's the use case for money? And we think stablecoins can be real money, and they are real money. And so, what are the use cases that are actually gaining momentum today? What are the use cases that are gaining traction? There are several. Cross-border payments is still fraught with friction and fraught with high fees. And so if you're a business that moves money around globally, whether it's your own money, so intra-money movement, or if you are paying vendors or suppliers globally, cross-border payments is a huge challenge, and stablecoins can directly address that. And you're seeing transaction volume go up pretty steadily over the course of the last year or so. That's the main use case that I think you're seeing businesses really get interested in now. And then you start to see more and more kind of opportunities where businesses, maybe they have a global workforce and they want to pay employees around the world. Those are use cases that can really be attacked with digital assets and stablecoins.
Now, I'm sure in your position, you're used to fielding some of the concerns around crypto and how that might develop in the future. How would you address concerns around volatility and regulation? Those seem to be the two main ones that come up.
Yeah, I think over the course of the last several years and continuing, the crypto industry as a whole needs to ensure that we are educating the world on what crypto is and what blockchain technology is, and assuaging people that it is not what they think it might be in terms of scams and speculative activity. And so what the real value proposition for blockchain technology is the ability to remove intermediaries and be able to send value seamlessly at low cost. And so what we're doing is we are educating not only regulators, but government officials and businesses alike so they can understand the value propositions that are here. And so at Circle, we have over 1,000 employees that wake up every morning thinking about how do you bring in mainstream adoption, but it can't happen without regulation, and we're really excited to see it going in the right direction around the world.
And let's bring this interview full circle, if you pardon the pun.
Sure.
But we talked about backbone at the start of this interview in terms of crypto potentially being backbone of the financial ecosystem. What's the end game here? Where's this going to finish up?
Yeah, I think you're going to start to see more and more use cases where people just understand that money movement on chain is superior to the way that it works today. And so you'll start to see more and more on-chain companies. You'll start to see use cases like insurance and FX and cross-border money movement. And you'll start to see more and more assets become tokenized. We tokenize dollars and euros, and you'll start to see more and more companies start tokenizing other assets. And so it's not going to be just an operating system for money movement. It'll be an operating system for value exchange more broadly. That's where we think it's really exciting in terms of the future and what companies are building. It becomes an operating system for value exchange of all sorts, and all industries will participate.
It's going to be a hot space, isn't it, to look out for in the next coming years. So,
Absolutely.
Kash, Razzaghi, thank you so much for joining me on the podcast today.
Thank you for having me.
So joining me now is Alex Teichman, SVP Embedded Finance and Banking Strategy at MAPP Advisors. Alex, thank you so much for joining us.
So great to be here. It's an honor. Thank you.
Brilliant. Should we start with a quick introduction to the business and your role within it?
Of course, yeah. Been in payments for a little bit over 20 years now. I always say I've kind of done my full round across the ecosystem, processors, couple of networks. Over the last 8 or so years, I've been more on the banking side, so really have grown an appreciation for the regulatory environment. In my current role, we help a number of financial institutions kind of understand and get into payments, whether it's from an issuing or acquiring standpoint. MAPP is best probably known for what we do on a transaction advisory side, a lot of sell-side advisory work, valuation work, and really the connective tissue between financial services from a product and technology standpoint, and then also from a kind of banking standpoint. So we bring the groups together to really kind of innovate and do it in a scalable way.
I want to start with how you are reimagining card solutions for modern businesses.
So it's a big question, right? So card generally has been in kind of very one-dimensional from inception. It's been for the purposes of purchases of goods and services. When you think about card, it's really been to either purchase something online or over the phone or mostly in person. And that's evolved tremendously, right? As different types of businesses come into the ecosystem, especially with COVID and the pandemic, the proliferation of e-commerce, that's obviously helped drive e-commerce forward. But really today, I think more so than ever before, cards have so many more use cases. It's not only for the purchases of goods and services anymore. Really, we think about the full end-to-end from a pay-in, pay-out standpoint. How do we use cards in different ways for different types of customers in different verticals? There's been a very, very deep, I think, vertical approach in terms of card acceptance and how, whether it's a card network or financial institutions, think about strategy. And then also ultimately how the end user pays. It's gone from really purchases to money transmission, money movement, and really evolving, dramatically across the board.
One of the areas that we focus on particularly here at Money20 is innovation.
Yeah.
I was keen to understand what innovations you're seeing in spend management and also real-time controls.
So everything's real time. Everybody wants everything instantly. From a consumer perspective, we want everything today. We have Venmo and Zelle as consumers, and that's translating over into businesses, whether it's SMB, whether it's enterprise businesses, and even for B2B, right? Those same users, whether they're sitting in finance or they're sitting on the customer side, they want that money to move more instantly. And so, of course, that translates into how they expect their business to be done. So onboarding is instant. Money movement is instant. Fraud becomes instant as well. So there's a lot of, I think, focus on how do we ensure that we're mitigating fraud losses when we think about that instant value proposition. And what are we doing now when it comes to B2B is what you mentioned. What are we doing from a B2B perspective, right? To ensure that while everything is more instant, now you've got accounts payable that's expecting things to move a little bit faster. And so perhaps they're now leveraging card in addition to ACH. How are we really not only creating that ubiquity across the different rails that are available, but also mitigating any potential fraud or losses that are taking place? So we think about that a lot, especially when we kind of look at it from a financial institution standpoint.
You mentioned at the top the amount of time you've been in the industry. Are you finding the speed of innovation, getting faster and faster? And how do you kind of stay across it now?
It's exhausting, but exciting all at the same time. It really is. When I think about when I listen, it's only been 20 plus years, right? But when I think about how much things have moved and how fast things have moved, agentic commerce, for instance, is moving at light speed. There's still a lot of standards and a lot of regulation that's required around what that means for the end user, what that means ultimately in the customer experience journey, but also within the confines of like the guardrails that the regulators create or the card networks create, and how that kind of all manifests. It's moving much faster, I guess, is a short story.
Yeah.
I think that everybody would agree to that. And it's exciting times. But again, we think about how do we make sure that we're doing it in a really sustainable way.
What about the impact that AI has on all that?
Oh, that's a loaded question. I try to stay away from those questions. Yes, is the answer. I'm a little bit probably more conservative. I read a recent statistic that said that 95% of all AI that's implemented goes bust, doesn't work. It's that 5% that really makes the biggest difference. It's that 5% that really changes whether it's your ROI or whether it's how many people you're now bringing into your organization. It's that 5% that makes a huge material difference. So I think a lot of that research is required, right, to make sure, and the trial and error is required. But today we see a tremendous amount of AI impact on the customer side, on the customer servicing side. There's a lot of use cases there that are very successful, and then of course, kind of on the compliance and regulatory side to make sure that you're vetting, whether it's from a KYC, KYB standpoint, ongoing monitoring. There's kind of use cases there where AI is making a huge impact as well.
How do you differentiate a business in a crowded card and expense management space?
You need to really have that full end-to-end flow. I think first and foremost, you need to do what you do well, which is the account payable component, right? People who are sitting in that role, in that account payable role, they want those products and those services to work efficiently and seamlessly for them before you go in and add in other products. Then the next step is really, what can I add in terms of adjacent value, and how do I continue to drive value for that organization? I'm a big believer that merchants are really the new platforms. When I say merchants, it's really enterprise businesses and enterprise merchants. And so from their account kind of payable standpoint or B2B standpoint, how are we ensuring when we build for them, when we service them and support them, how are we ensuring that we're allowing them to become platforms? How are we making payments more seamless, not only from a pay-in standpoint as merchants, but also from a payout standpoint potentially? And so what are the things that we can do to kind of speed that along potentially and make it more efficient?
Money 2020, it's one of those events that certainly highlights how much of a global digital world we're in. We've got people obviously from all over the globe here, and we're speaking to numerous people from different parts of the world as well. What are card solutions doing to help enable global flows of funds?
So when you think about card and the value that it provides into the kind of overall payment ecosystem, right? Before we said that it was kind of originally created for the purposes of purchases of goods and services. Now we're really seeing card stand out as a kind of best-in-class global solution when you think about pay-ins and especially payouts. Visa Direct, as an example, has been kind of an incredible product, and of course MasterCard Send. Both have been incredible products when you think about global payouts and being able to pay out across the globe 24/7. If the customer or ultimate beneficiary on the other side has a debit card in hand, then they're able to receive payment frictionless, instant, and also kind of inclusive of guardrails that are created within that card ecosystem. So I'm a big believer in, I always call myself a card girl, right? So a big believer in the value that cards offer when we think about global payments. Now there's, of course, a lot of innovation around stablecoin and a lot of work that's being done even at the card network level from a stablecoin settlement standpoint, other use cases where stablecoins being leveraged. Very, very exciting times when it comes to that. But I think the card networks are really leaning in to opportunities to continue that value across the globe.
Alex, I've got one final question for you. We often like to finish with a kind of forward-looking question. I'm keen to understand how you see card-based payments evolving in a world of real-time and also account-to-account options.
Yeah, I always say it's not a zero-sum game, right? It's not card rails or bank rails or DeFi. It's offering customers that choice and the opportunity to choose what's best for them, and enabling them to pay, whether it's faster or more seamlessly. And ultimately, whether it's a customer or a business, a B2B or a B2C transaction, it's cash flow. That's really what we're talking about, an opportunity to offer cash flow as a service. So it's not the most exciting answer, but I think there's an opportunity for us to understand why the card rails are so important, especially in the U.S. market, and the maturity of this market and where that's headed. And where that's headed is really opening up the global market for U.S. businesses in order to transact in a seamless 24/7 way. I think the card rails are really leaning into that, and there's a lot of opportunity there. Another one is stablecoin. Stablecoin settlement, I think, is super exciting, just to be able to, again, when you think about marketplaces as a use case, right, and having a marketplace seller that's in another market and being able to settle out to them. Today, you can do that via a card rail. Now with stablecoin, you can continue that value and you can continue that, that value proposition.
Covered a lot of areas there in a very in our short time that we've had together, but really appreciate you sharing your insights with us. Alex Teichman, thank you for joining the podcast.
Thanks so much. So exciting.
So joining me now is Nick Stanescu, EVP and Chief FedNow Executive at Federal Reserve Financial Services. Nick, thanks so much for joining the podcast.
Thank you for having me.
I want to start with FedNow. It's a major step forward for real-time payments in the US. Tell us a little bit about it and also what the vision is behind it.
Yeah, great. So FedNow is a payment infrastructure that has been built and is provided by the Federal Reserve. And the vision behind it was to provide access to instant payments to organizations of all sizes across the U.S. We currently have 1,500 organizations, financial institutions, that have joined FedNow. So we're off to a great start. We started and we launched FedNow 2 years ago on July 2023, and we're seeing a lot of momentum. But what we see the vision longer term for FedNow is to provide this accessible 24/7, 365, an option for all individuals across the U.S. and businesses to send and receive instant payments.
One of the things I was keen to look at is how FedNow is going to enable innovation across the financial ecosystem. Can you just talk us through that?
Sure. I mean, actually, innovation is already happening.
Right.
Service provider, financial institutions, fintechs are already innovating on FedNow. We're seeing earned wage access. We're seeing QR code-enabled payments. We are seeing new treasury tools. So a lot of innovation and innovative use cases that are already happening. We are looking to facilitate that. We're looking to create space, and we're providing APIs, we're providing developer tools, we're providing testing environments to create the space for the industry to design and innovate on top of the service. And I'll say so far it's working. And we're getting a lot of industry feedback in terms of what else is useful to have on the service. So this year we increased the limit, the maximum transaction limit for FedNow twice, once in June, and we just recently announced that we're going to increase it to $10 million in November. So what is that going to do? More innovation, more use cases, corporate use cases, government use cases, treasury type of use cases, real estate. So we're here to support this kind of innovation to happen through instant payments in the U.S.
Has any of those innovations, caught your eye in particular?
I really like the Treasury Department recently announced that they're going to use FedNow for FEMA payments. So those are emergency disbursements. I think that's great. That's a great use case for FedNow. That's a great use case for instant payments. There's something happening. You need access to your funds. You need access to those funds immediately. That's instant payments right there.
Great. What would you say are the biggest challenges in driving adoption for real-time payments?
Yeah, I would put them in three buckets.
Okay.
One, there's some new institutions, and they're new to instant payments in general. So they don't know where to start. So we've done a lot of education there of financial institution in terms of FedNow being strategic, that it's better to start earlier, the sooner the better, really. I think the second challenge is those institutions that are already on the service, but they are only configured to receive payments. And some of them might have a harder time switching to also sending payments. And the value of instant payments is, yes, in receiving payments, but more significantly in actually the ability to send payments. So, enabling that for consumers, enabling that for businesses. You can be a small business and you can, pay your vendor immediately or get paid immediately. So there's a lot of value in send. What we've seen successful there is some institutions actually enabling a select set of customers first to send. So basically kind of like minimizing and then learning from that, or enabling certain use cases for send. And then as they get more experience in expanding. I would say the third category is this perception that 24/7, 365 operations is hard. And we heard from some credit unions, small credit unions, that in fact they were able to manage just with the existing staff and just updating some of their processes. So in fact, 24/7 operation doesn't require additional staffing, not always. There's a lot of transparency and automation that is happening with instant payments that facilitates transactions and minimizes customer calls and operational burdens.
So moving on in terms of other networks and systems, how do you ensure interoperability there?
So one of the things that we've done is to build FedNow on ISO 20022 message standard. And that's basically the international language of payments. Other payment systems are also using ISO 20022. It supports rich data. So that's the way that we're looking to facilitate service providers, financial institutions, ease of moving payments between the different network rails.
Okay. And then final one for you, Nick. And one of the things we like to do is on the podcast is quite often like look forward, maybe 12, 18 months or so. What's next for US payments infrastructure beyond real time?
Yeah. So I think certainly for instant payments and for FedNow, we're going to see more participants. We're going to see more volume. We're going to see more use cases. We're definitely going to see more innovation. But even beyond instant payments, and really right now, a lot of focus is on speed. I think we're going to see a lot more focus on other areas, such as the rich data format, availability of funds, finality of payments. There's just a lot of value that I think we're going to capture from instant payments and FedNow over time. I think we're going to see payments that are more intelligent. I think we're going to see payments that are more inclusive. I think we're going to see payments that are certainly more ubiquitous. I think there is a evolution, a change, a huge change, maybe a revolution that is happening in payments right now. I think we're going to see a lot of rationalization of the industry as well. And I think it's a great time to be in payments, to be there in the front seat of that change, and for us at the Federal Reserve to have a role in facilitating and supporting that change.
Yeah, well, it sounds like you're going to be busy over the coming months and years. But for now, Nick Stanescu, really appreciate you joining the podcast.
Thank you for having me again.
Many thanks to all our guests for joining us here in Newline by Fifth Third Suite here at Money 2020. Hope you've enjoyed these conversations, and if you have, then please do give us a positive rating or review on your podcast app of choice.
And of course, if you'd like to get in touch with the show, you can do that via the contact form at csuitepodcast.com, or you can find me, Russell Goldsmith, and Graham Barrett on LinkedIn. But for now, thank you for listening, and goodbye.